How's it going today, guys? Welcome back to the channel. Hope you're having a great day so far. So in this video today, we're going to be talking about farmland investing for beginners. Now, this is an asset class that most people are probably just simply not familiar with. And so I want to basically shed some light on that for you if you're a complete beginner, talking about what this investment actually is. But in addition to that, if you're somebody who is more familiar or ready to get started with an actual farmland investment, I'm going to be showing you exactly how to do that as well. So make sure you guys grab a pencil, pad of paper, drink whatever else you might need, because we have a lot of information to cover here. And that being said, guys, let's jump right into the presentation. Okay, guys, so let's talk about farmland investing for beginners, or why exactly people are beginning to either invest in farmland or explore it more as an investment option. Real quick, guys, I just have to make a disclaimer here that I am not a financial advisor. This is not any sort of financial advice, and you should always do your own due diligence above and beyond this video before making any sort of investments out there. Also, I have been getting a lot of spam and scam comments down in the comment section below, so just make sure if you are, commenting or discussing with anyone down there, don't give out any personal information. And if you are talking with me, make sure there is a white check mark next to my name. Otherwise, that is almost certainly going to be a scammer. So right off the bat, what exactly is farmland investing? No, it doesn't necessarily mean that you're going to go out there and buy your own farm and be an owner-operator of farmland. That is just one of the many ways that people do it. Simply stated, farmland investing is an investment dealing with crops. Now, there's pretty much three main avenues that this is accomplished right now. Number one is farmland REITs. Number two, direct purchase of farmland or a particular farm. That would be if you went out yourself in your local area or somewhere in the country and found a farm, got a mortgage, bought it yourself, and then rented it out, most likely to a farmer, or decided to be an owner-operator and farm that land yourself. Number three is the one that is growing in interest much quicker, and that is investing in farmland via crowdfunding. That is where people from all over the place kick in an investment towards a particular farm. They all invest together, and there is a separate entity managing the farm-related duties. Now, we're going to cover the basics here in this video, guys, but if you are looking to learn more about farmland investing, I actually have a completely separate blog that I started exclusively about investing in farmland about a year ago. It has free guides for beginners. We have reviews of pretty much every single farmland investment platform available today right now on the blog. We also have comparisons as well as podcast interviews with many of the top farmland investment platforms. So if any of that interests you guys, make sure you jump over to farmlandriches.com and bookmark that website for your future reading pleasure. There's also going to be a link down in the description below. So let's start off with some statistics about farmland in the United States. Well, first of all, there are 911 million acres of farmland in the US, and over half of the acres are rented rather than owned. So a lot of people are actually buying farmland as an investment and then renting it out to a farmer as a means of income or potentially preservation of wealth as well. 45% of U.S. farmland is in small family farms, and 80% of rented farmland is owned by non-operators. Now, here in the United States, the top three crops grown are number one, corn, number two, soybean, and number three, wheat. So if you have ever driven all over the US, which I actually did a couple of weeks ago, it was amazing to see all of these massive cornfields and soybean farms all over the country. I don't know that I saw a lot of wheat farms, but I do know those are all over the United States as well. So this is pretty basic stuff here, guys, but here's a few examples of the different crops that we grow here in the United States. Corn, oranges, peanuts, also rice, apples, cotton, walnuts, etc. Now, beyond that, why are people actually investing in farmland? Well, the main reason is the consistency in returns of this investment. Since 1992, it's been an annualized return of over 11%. And for those who know a lot about the stock market, well, that has actually beat the S&P 500, which returned 10.7 over that same time period. Now, not only are these consistent returns since 1992 higher than the S&P 500, it comes with another ideal element, which is low volatility. That is the fact that farmland is not correlated to the stock market. So you tend to see less up and down movement with farmland. It's sort of a slow and steady investment. On top of that, we're seeing increasing demand for food worldwide, as well as shortages at the grocery store. And we're also seeing that farmland itself is not increasing. In fact, we're actually destroying a lot of farmland and building houses and different complexes on top of it. And then also, plain old diversification of assets has pushed more and more people into this category of alternatives. And this is pretty wild right here, guys. According to the NCREIF Bloomberg bank rate report here, this is the average annual returns comparing these different assets. So farmland is coming in at the highest, 11.3, next to the S&P 500 at 10.7, commercial real estate 8.0, gold 6.5, bonds 6.4, CDs 2.6. Now still, most experts would recommend having your money spread probably across all of these different assets here, so you wouldn't want to put all of your money in farmland, but my hunch is that most of us are probably overweight in equities or other things on here. Many of us probably have zero exposure to alternatives or any type of farmland investment. Now, one of the most important things to understand about an investment is how does it actually make me money? So with farmland investing, how are returns realized? Number one is capital appreciation, or simply an increase in the value of the land over time. That's pretty much the easiest one to understand. And then number two is going to be distributions, which is where you're earning a portion of the rents received or potentially a portion of the crops that were sold. So that's what's really cool about farmland and other real estate investments, is that it allows you to be paid in two different ways. And when it comes down to actually investing in farmland, right now the options are getting a lot better, but in the past, they really weren't that great. We do have an article over on Farmland Riches going into more detail about these two particular REITs. So if you guys want to learn more about that, I'll put a link down in the description below. Now, beyond the REITs, you can of course make a direct investment or purchase of farmland yourself, but that of course is going to have a bigger risk because you're not diversified across many different farms. You're putting all of your eggs in one basket, and you're going to have to pony up a good amount of money to secure a mortgage or buy that farm outright. But it is an option nonetheless. Number three is the most popular one these days, and that is crowdfunded platforms. However, most of them are limited to accredited investors only. If you want to learn more, again, guys, on farmlandriches.com, we have a tab of platform reviews where we have over a dozen reviews of many different farmland investment platforms available on the market today, both here in the US as well as in Canada. So if you are watching this from Canada, we have been adding a lot more content specifically for Canadian farmland investing. Also, if you guys want to look at live deals right now, there's also an affiliate link down below for AcreTrader, which is one of the best options for getting into farmland investments, assuming that you are an accredited investor. And even if you're not, you can still peruse the website, take a look at offerings, and just simply learn more about farmland investing as a whole. So if you guys want to check that out, there is an affiliate link down below for AcreTrader. Now, going over the three options here for investing in farmland, it's always good to do a comparison to understand, why it is that one may be different than the other. So starting off in the category of the REITs, it's appealing to a lot of people because of the low cost. You can get started for the cost of a single share of that REIT. The complexity is low, but the volatility is high because it trades on a major exchange with stocks. So you do have high liquidity, it's easy to sell, but you're going to have a lot of correlation to the stock market. And overall, with those REITs, I have found historically the return potential to be low. So personally, it's just not a way that I would recommend gaining exposure to farmland. Direct purchase, if you have, the know-how and you have the money, it could certainly be a good option, but return potential is unknown because you're going to be going all in on one particular farm. You could do really well or it could do poorly, but it's all dependent on that one particular farm and whatever crops are being grown there and those local weather patterns and different elements. This is going to have low liquidity, but low volatility because it's not on a major exchange. It's a physical farm, an actual piece of real estate. Higher level of complexity and much higher cost. Crowdfunded sort of gives you the best of both worlds. You have better return potential than REITs. There is lower liquidity, so you do have to be in it for the long haul. This is not the type of investment where you put your money in for 6 months and take it out. In most cases, it's going to be probably a 5+ year time horizon, but you're going to have that low volatility because you're not correlated to the stock market, a little bit more complexity, but a lower cost. More complexity than on the REIT, but obviously less than a direct investment in farmland. However, if you do decide to use one of these crowdfunded platforms, in particular AcreTrader, they have a whole team that manages all of this for you. So you simply choose the farms you want to invest in, make an investment, and let them manage everything else. Now, of course, there's a lot of different platforms out there for investing in farmland. I'm not going to cover any of them really here in this video, guys, because it would be probably 2 hours long if I went into it. But we have a review of every single one of these platforms over on farmlandriches.com if you decide that you want to learn more about any of them. That being said, a quick overview here. Some of the most popular ones are AcreTrader, as well as Farm Together and Steward. And then over in Canada, you have Area 1 Farms and a couple of others that are Canadian options as well. Now, as mentioned earlier, most of these crowdfunded platforms require you to be an accredited investor, so I think it's important to identify what exactly that is. So in order to be an accredited investor, you need to meet one of the following requirements. Number one, you must have a net worth of $1 million or more, excluding the value of your primary residence. Number two, an annual income of $200,000 or more, and if you're married, that is going to be $300,000 or more. For the last 2 years, with expectations it will remain this high going forward. Or number three, you hold an active Series 7, Series 65, or Series 82 license. Lastly, guys, I do want to cover the risks associated with farmland investments because, as we know, there's no such thing as a perfect investment out there. So here are the 3 most common risks associated with investing in farmland. Number 1, weather risk. This is not something that you would run into with most investments out there, but with farmland, the weather plays a huge role in the profitability of a farm. And even if you're just renting that farm out, well, if your farmer doesn't have money because the crops aren't coming in, that could also be a problem. Number 2, there's also crop risk from things like insects or disease. And then number 3, there is that liquidity risk because of the fact that it's not as easy to sell a farm as it is to go out there and sell a stock. So anyways, guys, that's going to wrap up this video. I hope you enjoyed it. If you did, please go ahead and drop a like for the algorithm and go ahead and subscribe for those future notifications. As mentioned in the video, if you want to learn more about farmland investing or learn about different platforms that allow you to invest in real estate, in particular farmland, make sure you check out my blog farmlandriches.com. And there's also going to be a link down below for AcreTrader, which is one of my most trusted platforms in terms of farmland investment. And if you are an accredited investor, you can view offerings right now and potentially make an investment. So there's an affiliate link down below for AcreTrader as well. But thank you guys so much for tuning in. I hope you enjoyed this video. Don't forget to bookmark Farmland Riches for your future reading pleasure. And as always, I hope to see you in the next video.